Welcome back from lunch. It was quite pleasant for me. I don't know about you, but I'll have a couple more of those, thanks. Amur Minerals has a single project called Kumenye. It's a nickel sulfide project located in the Russian Far East. It has 4 deposits, individually drilled, of which 2 we now know are linked together, so this slide needs to be updated that we have actually 3 deposits. It's a premium sulfide nickel copper sulfide project where you're capable of making class 1 nickel, which is really important for the creation of electronic vehicle batteries. The battery potential is likely to induce a premium pricing when you start taking a look at sulfate versus sulfide costing and also lateritic nickel components themselves. The project also contains byproduct metals of copper, cobalt, platinum, and palladium that'll be recovered into a concentrate for onward sale to a toll smelter. Excuse me. We have presently, where we're located, we have rail access into China, into various ports, allowing us access to Japan and Korea. These are the 3 most largest nickel producers in the world. I'm going to move ahead on this because I have too many slides for the time that's been allotted. But this provides a layout of where the company sits in relation to the project itself. We are located near the Sea of Okhotsk, the turquoise-colored box furthest to the north. The turquoise-colored dotted line is a road that will have to be constructed. The rail line that you see there is an approximation of the Baikal-Amur, and that line parallels the Trans-Siberian, which is located to the south. As you can see, we have various ports of call, which allow us to get into China, Southeast Asia, Japan, and Korea itself. This is one of the largest deposits, nickel sulfide in particular, located immediately adjacent China. This is an important aspect because China is also the largest consumer of nickel in the world and also the largest producer of electronic vehicle batteries themselves. Presently, we're looking at a total combined nickel equivalent of about 1.5 million tons. We've taken a look at the project economics. We released a pre-feasibility study in February of this year. And what we're seeing is that for a total capital investment of about $570 million, we have a net present value of 10% discount of about $614 million, with an internal rate of return of 29.3%. Sustaining capital is defined as replacement equipment for mining fleets and underground development costs that'll be required as the project advances. It's going to be about 3 years to construct, 15 years of production at this point in time. We do know that it's going to be much larger. Our drilling from 2018 has substantially enlarged the deposits themselves. We're looking at a throughput of about 6 million tons a year. That could be larger. It could provide additional upside potential. All our numbers are done on a 10% discount, and we have utilized $8 a pound, or about $16,600 a ton of nickel. We've also broken out the costs on a per ton of ore basis, and over the life of the mine, we're looking at a total cost of about $23.04 a ton, working out to about $8,536 per ton of payable nickel. It's important to point out payable. Whenever you sell into a smelter or a marketing group, they will keep 30% of your nickel, and they will also keep all your byproduct metals. This is very punitive, and it's challenging for companies, but these are the terms that are presently in state of play. We have been working on a development timetable here, and what we're looking at is basically 3 stages. The first stage, which is the left third, is the development of a TEO, which is the Russian equivalent of a feasibility study required under Russian law. And then this information will feed through into a Western bankable feasibility study, which is the second portion of the chart, which is about the middle third. Then the right third is the actual construction and placement into production in about 2024. The TEO timetable is very important to us. We have a delivery date set for December of 2020. And these are the various aspects of what we need to and what we will be accomplishing. Primarily, the key target on this is we are looking at generating a copper concentrate. This will allow us to establish a streaming agreement that we can market into various trading houses and commodity houses, as well as taking a look at, is this project completely open pit or does it have an underground component as well? We prefer that we go with 100% of an open pit operation itself. Now the prospects, what drives the companies that are in the nickel sulfide minerals at this point in time? And it's really the electronic vehicle battery and the grid power support batteries. Now, what we're seeing is that there's a heavy push by the governments, especially in Europe, to make sure that we reduce our emissions as much as possible, creating a greener platform for all the citizens of the globe. And we're also looking at the cathode chemistry in these batteries is markedly changing. If you take a look back as little as 5 years ago, it was a 1-1-1 battery that was being manufactured. And that was 1 part cobalt, 1 part lithium, 1 part nickel. What we have found and through the development of various automobile industries and also the chemistry groups, is that the cathode performance is now being raised to 8 parts nickel, 1 part lithium, 1 part cobalt. By doing this, it reduces the cost for cobalt, which is substantially higher. Today it's about $14 a pound, versus nickel, which is about $8 a pound. A tremendous savings. The renewable energy is often overlooked. Very little of that energy that is created today by wind, solar, is stored in batteries for allowing for peak usage when it's required. So what we need to do is we need to also start taking a very hard look at creation of battery storage facilities, which will also require nickel. This is highly overlooked. Only 3% of today's energy is generated by renewable energy, and hence most of that is going straight into the line and losing its effectivity by not being able to be used during the peak production periods. What we're also looking at is that the nickel demand is projected to rise about 18% year on year through the year 2030. That's a substantial increase over the current consumption. Last year we used about 2.1 million tons of nickel worldwide. Of that, only about 3% coincidentally was used in electronic vehicle batteries. So the way forward with a lot of nickel projects is taking a look at what the impact of the electronic vehicle battery actually does to the nickel market itself. What we're seeing is there's going to be long-term deficits, which are shown on the lower left chart, where their little green arrow there is 1.7 million tons. We need to put that in perspective. That's a 1-year shortfall. We as a company can produce 1.5 million tons over the life of our mine. So in order to make a new mine or to maintain that production curve for the batteries itself, that means somebody has to discover, drill, engineer, construct, and mine the deposit that we have. It took us 10 years to get to this point. Do all of that in 1 year. So there is a looming nickel shortage sitting in front of us. When this nickel market snaps, I believe it's going to be a tremendous snap. And you can see the price forecasts on the right-hand side. We're looking at Wood Mackenzie's CRU. We ourselves are looking at using a long-term pricing of $8 a pound, or about $16,000 a ton, whereas we're even seeing prices as high as $12 a pound being forecast by Wood Mackenzie. That's a tremendous difference. When you take a look at our cash flow models, if we use $12 a pound, the net present value becomes basically just too hard to believe. You can't fall in love with your projects. What this chart here shows is capital intensity. Capital intensity is defined as what it costs you to build the initial capital estimate out per ton of delivered nickel. And we fall right in the midst of the nickel sulfide ranges at about $25,000 a ton. This is our C1 cost. The C1 cost is not an official accounting measure, but it is a way that is utilized by various mining companies so you can do a comparison of what it costs per unit of metal. So you can actually kind of rank companies. You can rank, say, a copper deposit against a gold deposit, or copper against nickel, or various nickel projects against each other. In this case, what we're seeing here is all nickel projects, and you can see our price is basically right at the middle of the cost range. Everything to the left half on that chart is basically sulfide projects. Everything to the right are lateritic deposits. There is upside potential. Over the years of developing the project, we have not had a full opportunity to fully optimize the operation. So the numbers that I've spoke about in this do not include the fact that we could make a copper concentrate, allowing us to generate up to an additional $500 million in operating profits. This is being investigated now through additional metallurgical test work. The test work is being done in Russia per Russian standards, as is required by the law. The second one is that we're going to take a look at the magnesium oxide content. This is one of the things that smelters don't like. For every % over a minimum threshold, you're going to pay $6 per ton that they smelt. You want to reduce that as much as possible, especially when you're taking a look at 6 million tons of year of ore, or about 400,000 tons of concentrate itself. That's a pretty substantial, you're talking $24 million a year potential savings. So where we're at today is we're in the process of completing this Russian feasibility study, the TEO, and we're basically done with the geology. The resource plan will be compiled according to Russian standards. Mine designs will be done. Beneficiation, in other words, can we make a copper concentrate? Can we make a nickel concentrate? Ore processing, which is the actual flow sheet design itself. To this point in time, the technology that we're using is off the shelf. It's about 140 years old. There's nothing new about flotation of a sulfide concentrate. As opposed with lateritic deposits themselves, each deposit is different, and there's a lot of dial turning and a lot of tuning on the specific compounds that you need to get optimal production. Hence, it also leads to higher energy costs and a higher cost per pound to generate it. The engineering design work, the project itself, we have 3 components. One is the mine site itself. The second is the construction of a road to allow us to haul supplies to the site and back from the site to the rail siding, and also the rail station itself. This will allow us then to deliver copper concentrate into rail cars for delivery into Vladivostok, St. Petersburg, directly into China, any other locations such as Korea, as well as taking a look at ocean freight costs all the way to Australia. So the options are many, and they have to be evaluated very carefully. Environmental, we do know that we've done our preliminary feasibility study includes an environmental section. That section is basically a fatal flaw section, which says, do we have any what they identify as red book fauna or flora on the site that would cause us to have any environmental problems? We don't have any of them reported, so we're quite pleased with that. Technical and economic assessment, when we're done with this TEO, we will go back through and we will completely re-estimate the net present value using a 10% net discount rate and a more reflective, what we believe to be long-term nickel price. At this point in time, we're going to hold the mark at £8 a ton. Post the completion of the TEO, and if I get my team working well in advance, we will start to put together the detailed final engineered mine plan, which also is reviewed by the Russian government for approval. This includes mine plans, detailed engineering designs, concrete drawings, layouts, pipe drawings, instrumentation, all of that. This will be completed in accordance with the Russian legislative codes. These codes will transfer across into a Western definitive and bankable feasibility study. So when you take a look at our project, we have 5 points that we like to look at. These are the size of the project. It's large. We know that there's other mineralization in the area. We've been scouting it for years. We can add to the license. We can expand the license. The location, we're 700 miles from China. We're in a mining jurisdiction that is very pro-mining. Russia and China are beginning to work closer and closer together as the trade war begins to unravel or ravel, whatever you prefer to view it as. The timing is very good for us. We're looking at being in production in about 2024. That is the time when there will be the largest deficit of nickel projected by Wood Mackenzie and CRU. We've got plenty of support from the Russian government. The Russian government is very keen to get investors in. Just a few things to consider. No net profits tax, which is 20% for the first 5 years. Then they're going to tax us at 10% for the next 5. So that's a pretty substantial gain up front. Metals royalties taxes are 8%. First 2 years, 0, then 2%, 4%, 6% in 2-year increments. So they're encouraging that. Social taxes on employees are reduced. And they will also give us value-added tax refunds. These are all incentives that the Russian government is quite keen to apply to projects. All you need to do, develop it, honor your mine plans, honor your payments and schedule, and you will obtain these financial incentives. The commodity, it's nickel. We've got cobalt, we've got copper. All of these are key elements for the future on the electronic vehicle department and the electronic vehicle batteries. So in summary, I'd say there's 3 things that are really key about our project. Right place, right time, right commodities. So we're looking forward to advancing the project using a very systematic approach, as only the Russians have, but at the same time aligning it with Western standards for bankability so that we can finance the project and make sure that we don't stress the project by undertaking any inappropriate financial placings, any inappropriate dealings with anybody. So we are working very hard to make sure that we keep the Russians happy, the potential Chinese market happy, and our shareholders happy. And we incidentally are listed on the AIM market in London under AMC. Thank you.